Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and welcome to a daily analytical report with Alpari. Finally, we do have this interest rate decision. It was a long way. First, a few months ago, chances for a rate hike in March were 40%. Definitely below 50%, and now chances for a rate hike are around 100%. So everybody's expecting that Fed will rise interest rates. Usually, when chances for a rate hike are above 70%, Fed is rising interest rates. So, well, we should expect that it will happen also today. Let me show you the calendar. This will happen in 6 hours. In 6.5 hours, we will have a press conference. Well, usually this decision should be made hour later, but we had a time change in United States soon in next few weeks. I think the next week or in 2 weeks we will have a time change in the rest of the world, definitely in Europe. So that is why normally my Warsaw local time, this interest rate decision is from United States is usually at 8 p.m. Today it will be at 7 p.m. Apart from that, as you can see in 28 minutes, we'll have a retail sales. So we should see that during our daily analytical report. We should see a reaction on retail sales, which is very influential data. We also will have CPI. So very important macro data will be shown today ahead of FOMC. That should have an impact on the market. Also, we can expect actually a bit of a higher volatility because the liquidity is probably lower. As always, ahead of the data, many investors are getting out of the market. This may cause a lower liquidity, so this may cause higher volatility. Also, it's Wednesday. We do have a vote in the Netherlands. We will see how strong. I don't want to say populism because, in my opinion, every side of politics is populism. I don't consider right-wing populism. For me, left-wing or those parties from the center are also populist. But we're gonna check what is the support for right-wing parties. For right-wing sentiment, that will be a hint before the elections in Germany and elections in France. Also, that's well, today we do have. It's hard to tell that Fed is an introduction, but it's the first interest rate decision in our small marathon because we do have a Bank of Japan, Swiss National Bank, and also Bank of England. Decisions tomorrow. Also, Bank of Indonesia will have their interest rate decisions tomorrow, but it is expected that those will remain unchanged. Also, on Thursday, we should expect the first outline. Well, the first outlook for the U.S. budget from Donald Trump. We'll see about this boost to spending on defense, and we'll see where the cuts will come from which non-defense agencies. From the fundamental point of view, we had slightly better data about API stockpiles. They dropped, which helped to create a balance on oil. This sharp drop, as we know, was triggered by, from the fundamental point of view, about U.S. inventories, which went significantly higher. Also, it was this movement, this bearish movement, gained momentum because of the stop loss orders being triggered, stop losses activation, and this created a huge downswing. And now this downswing stopped on a 50% Fibonacci level. Also, this upswing is driven by a slightly better API data. From the fundamental point of view, that would be it. So we're waiting for the FOMC, but again, regarding FOMC, the rate hike is more or less certain today. What we are waiting for is the press conference and economic projections from, as you can see here on the calendar, economic projections and a press conference. We want to see about the future path of interest rates. We want to see how many interest rates should we expect this year. Should we expect 2 interest rates rises, 3 or maybe 4? That would be quite hawkish Fed. What's scenarios? Well, everything is good for stocks, as we noticed recently. Well, not recently, but as we can see for the last few weeks, months, or maybe years, that bad news is good news for stocks, and good news is obviously good news as well for stocks. So stocks does not care about the interest rates rises, as we can see now, because we are very close to the all-time highs ahead of the interest rate rise. But for the dollar, definitely a hawkish Fed should create a stronger dollar situation, which should also affect the gold and other commodities like oil. So it's not about the rate hike today. It's about the economic projections, because it is expected that we'll have a rate hike today. But we want to see is Fed is hawkish for the rest of the year or not. But first, before that, as we said, in 23 minutes, we'll have retail sales data and CPI data. So let me show you the charts. Right now, we'll start with Brent Oil, and we'll start with DAX. First, maybe indexes. Let me hide all. Give me a second, please. Show all. So what we're having here is DAX, which defended this horizontal support yesterday. It was very important support. Price created a long tail here, which was perceived as a very bullish situation. So that's why the price went up today's morning, but this optimism vanished quickly. But as long as we stay above this horizontal support here, the sentiment is definitely positive, even if we are staying below this line. But it's just a normal correction. It's just a normal side trend. Side trend in a correction shaped like a side trend, like a pennant, like a rectangle. In an uptrend, just tells us that this uptrend should be continued, that this trend should be continued. So as long as we stay above this line, the sentiment is positive. Even with how crazy does it sound, because the stocks are advancing higher and higher and higher and higher, but that's how the trend is, and traders should never argue with trends, because that's one of the principles of technical analysis and price action, that trends last for longer than you think. So you never should argue with trends. You should just accept that, and in trends you should look for an opportunity for the trend to be continued rather than reversed, because there is always a bigger chance that trend will be continued than reversed. Simple as that. So that's the situation on DAX. Let me show the situation on Brent. Well, we had this bigger inventories from US, which triggered a sell-off here, which was driven also by the stop losses activation, because many buyers had their stop loss orders below the red line, also below this first horizontal support labeled with the orange line. The price was falling, and finally we tested those highs from 22nd of November, also 50% Fibonacci level, and we finally got a bounce. This bounce is also driven, is supported by API data from United States, which shows that stockpiles decreased a little bit. Where is the next resistance? The next resistance is 38.2 Fibonacci level, and here, and the trend is negative, and those resistances should be used for opening new short positions, because that's what the trend is, and in our opinion that's what will happen actually on oil. Even if the price will get higher, those few dollars here, $1 or $1.50, that will be just a good occasion for selling. But again, as a price action trader, we have to wait for the price action to show you a proper signal. So you have to wait for the price to create a reversal pattern here, create a bounce like a long head or a head and shoulder pattern or double top formation. And once you will see that, or a candlestick formation like bearish engulfing or an evening star, once you will be able to spot such a formation, that will be a good trading signal for going short. Euro dollar. We were anticipating that the price will bounce here, and actually that's what happened yesterday. The price tried to, well, that didn't happen, all right? That happened in we had a 20 pips bounce, so we had a small reaction, good for short-term traders, but finally at the end of the day, this horizontal support was broken. As you can see, they created exactly the correction equality pattern, and then they reversed. So that was 114 pips movement, and this one was also 114 pips movement. It happens a lot, you know, about those correction equality patterns. You shouldn't be surprised that it happened. It happened again. We got a bounce from this, and now the price is trying to attack this horizontal resistance again. I do not normally enter such low time frames, but I would like to show you a situation here, an interesting setup. So this is left shoulder head and right shoulder. Once we will be able to close above this this horizontal, well, not horizontal, but this neckline, that will be a buy signal. That can happen quite soon, because in 17 minutes, 16 minutes, we'll have a CPI and retail sales data, so that can be influential and drive the price 12 pips higher, especially that it's not a big distance here. But I'm wondering if the buy signal created here can be sustainable before Fed. Right, I don't think that many traders will follow it, that they will like to enter the market before Fed, maybe for a short-term transaction. But the thing is that when there's a Fed, FOMC in the evening, there's usually a low liquidity, and those signals from the technical analysis are not very strong, are not so relevant. But anyway, if there was no FOMC tonight, that would be a great opportunity here to buy. Obviously not now, because it's just a potentially inverse head and shoulder formation. It will be, the buy signal will be created once the price will manage to break the neckline. So far we do have a potential for that, but the signal is not created yet, right? So a nice opportunity for short-term buyers, but not yet. Okay, let me switch to another account to show you the rest of the currencies. Euro to British pound. British pound got a little bit stronger recently, and created an opportunity for the buyers to buy here. Why here? Because we do have a horizontal support, and the price tested the upper line of the symmetric triangle formation. So actually this is a strong buy signal. on this instrument, but this is a buy signal created on a long-term chart, but tomorrow we do have interest rate decision from Bank of England. But if we'll stay in this place, more or less, that will be a nice buy signal here because of the hammer bouncing with the long tail from the upper line of the symmetric triangle, and that will create a nice long-term opportunity. Australian dollar to American dollar here, we got a breakout from the flag, but the price did not respected that entirely, and finally they decided to break the midterm trend line. So actually what we are having here is kind of an end of this bearish correction here, shaped like a flag. Also, in addition to this, look at that. What's that? If I remove that line, that line, and that line, and that line, and I would insert here, here, and here, what's that? That's an inverse head and shoulder formation. That's a flag. So we have a breakout of the neckline, we have a breakout of the upper line of the flag, we have a breakout of the neckline, so that's a buy signal here. I wouldn't go now. Despite the fact it's strong, I would wait for the comeback above 23.6 Fibonacci level, because it's not only a Fibonacci level. Usually 23.6 is not very strong level, but what I'm seeing here is also a horizontal resistance created by the resistance from the end of January and from the beginning of February. And that would be a decent technical situation, because look where we bounced from. We retraced 38.2 Fibonacci level of the recent downswing. We bounced from this horizontal blue area. It looks very promising for buyers. There was a very high correlation between Australian dollar to American dollar and gold. But this correlation is somehow lost recently, so gold is a little bit weaker than Australian dollar to American dollar. What we are having here is a pennant. Pennant is a trend continuation pattern, so we should see more a breakout of the lower line of this formation. But if the Australian dollar to American dollar will go higher, that can support also the bullish movement here. Euro to Australian dollar. So we can see the strength of Australian dollar recently. That breakout labeled with the orange color was indeed a false breakout here. Also, at the same time, the price created an inverse head and shoulder formation that we showed you yesterday. And a beautiful price action here. So we got a breakout of the neckline. The price broke the support, tested this as the closest resistance overnight, and now they are trying to break the horizontal support here. Next potential support is somewhere here. Once this support will be broken, this horizontal support will be broken, we will be able to test this area. We can remove this inverse head and shoulder formation. You know that you remember this formation. We are talking about that for a quite long time. And that's gold. Euro to Japanese yen. What we're having on euro to Japanese yen is also a kind of a false breakout here. And the price is now moving lower. The closest support is here, but as long as we stay above this horizontal support, here the sentiment is positive. And we can think about going long here. Most probably we do have a correction pattern. We do have a correction equality pattern. Let me see here, or maybe this one is a little bit too small. Well, alright, here we do have a correction of 117 pips. Here we do have a correction of 100 25 pips. That's not a big difference. Also, what do we have here? There's a trend line. As long as we stay above this blue trend line and this horizontal support created by this upper orange area, the sentiment here is positive. American dollar to Mexican peso stays in a side trend. As long as we stay below the red line, we cannot think about long position here. It's not here yet. I think that buyers will be now struggling to defend the horizontal support here, labeled with green color. New Zealand dollar to Japanese yen. We are exactly below, in the middle, below the horizontal resistance and horizontal support. The sentiment stays negative. Why it is negative? Well, I think that the price will test the lower line here. Why is that? Because we bounced from the horizontal resistance here with the double top formation, and I think that we should aim for the support, especially that we broke this resistance. So sentiment here on New Zealand dollar to Japanese yen is negative. Here on Canadian dollar to Swiss franc, I'm seeing a good pending order opportunity, and by pending order I mean a sell stop once this horizontal support will be broken. Why is that? Because we had a breakout of the lower line of the symmetric triangle formation, which triggers a sell sentiment here. Also, we broke first horizontal support. Now we're testing another one, and in my opinion, once we will have a breakout here, that will trigger a waterfall here, so the price should go down. Canadian dollar to Japanese yen. As long as we stay above this horizontal support, I will show you the big picture. As long as we stay above this blue line and this orange horizontal support, the sentiment is positive. Once we will get here where the X is, that should trigger a sell signal on this instrument. So here on this instrument, we are waiting for a situation to develop. Here on American dollar to Japanese yen, let me hide all. Wait a little bit. Okay, 1 second. Yeah, we do have price movements, but as you can see, they are not very big. That's what we are telling you from the very beginning, that ahead of FOMC, most people are escaping from the markets than entering it. Here we do not have a strong trading signal at all. There was a buy signal created here once we broke this line. We touched first horizontal resistance, bigger bounce, so the sentiment is neutral on American dollar to Japanese yen. Australian dollar to Swiss franc can possibly have a buy signal here. Why is that? Because with this downswing, we had a false breakout here, false breakout of trigger of this head and shoulder formation, and also false breakout below this horizontal support here, right? So this is false bearish breakout. Most probably, if sellers open positions here, they have stop losses somewhere here, and stop loss for short position is a long position. So what we should see here is a strong upswing after this horizontal resistance will be broken. To this horizontal resistance we still have some space, so we should wait for the price to get there and break it, and that will trigger a buy signal. Australian dollar to New Zealand dollar, what we're having here is a very interesting situation, because on the long-term chart, on a weekly chart we broke the long-term trend line. On a bit smaller chart we do have a strong upswing, but we had a nice correction here, upswing, and now we're having another nice correction here shaped like a flag. The price is trying to break the upper line of the flag, and once they will manage to close above this level, that will trigger a long-term buy signal. It looks very, very promising for the buyers, so there's a nice buying opportunity on Australian dollar to New Zealand dollar with a long-term trend, because the long-term trend after we got a breakout of this trend line is positive. So even here you can think about the position for 320 pips for this kind of an upswing, and if you try to enter with a very low risk, so for example 30 pips stop loss, and try to aim for 300 pips movement, that's risk to reward ratio 1. But with this idea I'm afraid that the price will try to test this horizontal support, so this low risk to reward ratio position can be closed. But once the price will get there, a new occasion will emerge here. So a nice occasion for a long position here, bouncing from this horizontal support. So as you can see, we just have to wait for the situation to develop as on other instruments. And the last but not least, what we're having is American dollar to Polish zloty long between 23.6 and a horizontal resistance here. When we'll have a breakout of 23.6, that will be a sell signal. When we'll have a breakout of 38.2 Fibonacci level, I don't think that there will be a buy signal, but sell signal will be temporarily denied. It will still be a correction, and I would say that the chances for the price coming below 4 zlotys for $1, that's more probable. But obviously this will be influenced by Fed, by FOMC in the evening. Let's turn on the euro dollar now. On euro dollar we will see the reaction on the market about the retail sales and CPI. As you can see, the movements are not volatile. We are just waiting to the data. We do have 1 minute, and we will be able to see the reaction on retail sales and CPI live. Let me remind you, what we're waiting for is the retail sales and CPI to be published. Twenty seconds. Okay, and we can see a drop. So American dollar, first reaction was American dollar a bit stronger. Most probably the data is a little bit better. Let me check on Twitter. What was the data? Retail sales 0.1, expected to 0.1, so according to expectations. Let's see what the CPI was. CPI was 2.7, expected 2.7, so no, not a big change. Well, according to expectations, it does not happen very often that the data is according to expectations. That is why, take a look, initial reaction for this data was 7 pips, which is nothing. And now the market will try to find an equilibrium, but the data was according to was the same as expectations, so there is no surprise here. Alright guys, thanks very much for watching daily analytical report. We see each other on well, after half an hour we're gonna have a webinar, but with daily analytical report we see each other on a Friday. Thanks very much. Remember, FOMC today, stay safe on the market, use stop loss orders and you will be just fine. Thanks very much and see you on Friday.